Welcome to the deep dive video update. This is a weekly video where I go through and I look at the charts that maybe I was using in some of the daily videos this past week, and then I stopped using them. We've seen some changes, especially after Friday. And then I have other videos that are unique just to this particular video. And the reason why I call this the deep dive video is we have to look deeper to see, are we getting any insight from these particular charts? And this is being prepared for Monday, October 13th. This is a chart that I only show in this video, and it gives us a long-term look at the VIX. The VIX is on this chart, but it's turned invisible. And over top of that is a 50-period exponential moving average, which moves a little bit faster than a simple moving average. We are down in a lower range below 20. Now, for the first time in quite a while, in Friday's session, the VIX itself, the daily chart, closed above 20. So it's above 20 on Friday's daily chart. It's up above 20 on the weekly chart. Little bit of a tick up down here, but nothing that's really changing the longer term range of the VIX. We'll keep an eye on that. The market really had a pretty severe down day compared to what we've been seeing lately, and we're trying to figure out, is this the beginning of more of a decline or just what we've seen over the last few months where we go down, we go below the 20-period moving average, and then we quickly come right back up? Nobody knows the answer to that right now. So we'll just keep an eye on some things here. Also, the VIX, and this has been pretty comatose lately. Even though we've been around the 16 range, 18 range or so, the VIX really hasn't been moving all that much. See how it spiked up on Friday, though. And so trying to measure the momentum really hasn't done us much good over the last couple of months as we worked our way through the summer. Did see a little bit of an upward move here, but this isn't really been giving us any insight as to the movement of the VIX. We can just watch that and see that it really hasn't been moving all that much. Then another fear gauge that we look at is called the Ulcer Index. I only start showing this in the daily videos if we go above the red line, which is a moving average. Even though we're going up a little bit here, we're not above that moving average yet. Now, if we continue to go down, that will cause this chart to continue to go up, and then I will start showing this in the daily videos. Now, the Skew Index, we were following this quite a bit as we worked our way through the spring and summer, and this tries to tell us that the market is expecting some kind of a big move. It's a variation of the VIX, and we don't really know the direction of the move that's expected. Well, we ended up coming down a little bit, going up. Sometimes this chart really doesn't help all that much. Other times it's really good at picking out a top or a bottom. Well, we're down below this red area for right now. So I only show this if we get up into the red area. Rarely do we get down into the blue area. So there's been no need to show this chart. And we look at a ratio between large caps and small caps, just kind of chopping along sideways. Even though large caps got hit on Friday, we were having an up week until Friday happened. Monday through Thursday, wasn't seeing a lot of positive conviction, but we were going up and just coming off of recent all-time highs. Small caps were doing okay, but not great. And we look at the ratio between the two after Friday's session when everything went down, and we're not seeing much of a change. And this just gives us an idea on a percentage basis how much we have advanced going from the October 2022 low, which now is getting harder to see over here on the left-hand side. We had another low in October 2023. We had the April lows earlier this year, and how much we've gone up on a percentage basis since that time. Then this comes and goes out of the daily video. This is the advanced decline ratio. Now, I do show a chart in every video that deals with the top part. We see it a little bit different. It uses different colors. But when we're above zero on a short-term basis, that's positive. Well, we're dropping below zero now, so that's negative. And we're also dropping below zero here based on volume. This is the unique part of this particular chart. The chart that I show in every daily video only shows price. It doesn't show volume. So sometimes I put this into the video, sometimes I keep it out. And momentum stocks, they tend to hold up better when the market's going down, and they've been doing a little bit better here. But when you look at the range of everything, we were coming up. This is when stocks were really going down last spring, and we've kind of settled into a range, and we really haven't broken out of that range yet when we look at this on a ratio with the S&P. US versus international stocks also pretty much range bound right now. Then technical alerts, this goes for the whole week. And you can see there's some red, there's some green here, positive, positive, positive. And then we got into Friday and everything went kablooey. Everything was red. Later on, apparently the Nasdaq set a 4-year high, but that must have been late in being generated here. And we start with Monday at the bottom. The last was Friday at the top here, and where gold is now going back above $4,000 here. But when you see an awful lot of red, not really surprising since we had a fairly significant down day. We started off good. You can see right here for the 10th. Green areas, we had a positive open, and then the news about this trade war between US and China possibly escalating again, and the market just went down after that. Then we look at 6 indexes, and we rank them on a scale of 0 to 100. The higher the score, the better looking the chart. Coming in first place is the Nasdaq. Went down a little bit on Friday here, but still coming in at 88.1. We were looking a little better. We were trying to get up into the 90 range. So for right now, though, this is the best looking chart. The Nasdaq Composite. In second place is the Nasdaq 100 coming in at 85.6. Then we have small caps. They've been doing a little bit better. Now they got hit pretty hard too, but they're still holding up okay as far as the technical analysis is concerned. Then we have the S&P coming in at 74.5. The Dow, which is just coming off of setting all-time highs, it's drifting down from a technical analysis perspective, coming in at 48.8. And then in last place are the mid caps, and they're showing some weakness. They've just been chopping along sideways. Now, if you watch any of the daily videos that I show, the mid cap growth to value ratio is probably the strongest one there is right now when we compare it to small caps and the S&P. That ratio is looking good. We're just not seeing any follow through at the index level, and that's why this is coming in with a score of 37.5. Short-term rainbow, we're coming down into the rainbow now. Now, we were above this as of Thursday's close and Friday's open, so we haven't seen enough time pass to really start to turn any of these lines down. We'll be watching that. We could bounce up out of this and get back above the lines, or if we continue to fall, the longer we stay below these lines, the more they might start to roll over. So yeah, we're still positive, but Friday caught a lot of folks off guard. And so we're just going to kind of fall back and see how things develop from here, whether we're going to bounce back up or if this is the beginning of a more substantial decline. Then intermediate term rainbow. Now we're just above the 50 period moving averages here. This rainbow goes from 50 periods up to 100. Now we broke below the 20 period moving average on the daily side. That's turned the short term to negative. We're still above the 50 period here. That's what I use to measure the intermediate term, and we're above that for right now. Now, not only in the S&P, but in the Dow, we're at the 50 period moving average. We're dealing with possible support with the Nasdaq 100, some other sectors, some other indexes that we follow. We're seeing a lot of this coming together right now, and we could bounce up off of that if there's some positive news that comes out or buyers come in when the market reopens again on Monday, because that's what has happened ever since we came up out of those lows in April. But this could also be the beginning of something too, because we're seeing some similar things happening that we saw right before we really saw a downturn going into the April lows. And so we'll just be watching these things, and we'll be watching this 50 period moving average and the other 50 period moving averages and the other layers of support, because they're kind of coming together. We might try to use that as support and bounce up from it, but it might not even be within the S&P. It might be one of the other indexes that we follow. And we are keeping an eye here on the 50 period moving average. And you can see how we're just a little bit above that for right now. And we're still well above the 100 period moving average. And then we're keeping an eye on this. This is one of the potential areas. Now, one thing that's kind of lining up is that this anchored weighting moving average that's in orange, that's just a little bit below current price. So we're seeing the 50 period moving average and this moving average coming together. That might mean that this could act as more significant support. Now, earlier on, I was showing this in the daily videos. This is a momentum oscillator. I only show it in the daily videos if we go above the black line or below the black line on the bottom, we're coming down now, and we're not getting any kind of an extreme reading currently. Now, this was really what I was focusing on pretty much going into August, especially, and even in September. Well, this dashed line means that we're 10% above the 200-day simple moving average. And other times when we got 10% or above at some point, and then we started to turn down, that meant a more substantial decline. We see that happening here in 2023, happened a couple of times in 2024. Is it starting to happen now in 2025? We're back down below this. So until we get back above 10% above the 200-day simple moving average, I'm not going to keep showing this chart. I did show this chart in Monday's daily video, but now I'll drop it out unless we have some kind of a monster up move and we go back above this 10% level. Bollinger Bands, we had been positive here on the daily side, kind of hugging along the upper Bollinger Band. That's positive, and the midpoint going up. Well, we really dropped down. Not enough to hit the lower Bollinger Band, but not too far away from it either. Now, this is a percentage basis, and I have to eyeball this. I always warn with this chart because you move these lines just a little bit and the whole percentage changes. This gives us an idea of how much we've gone up from the October 2022 lows, the 2023 lows, and so forth. And then what we're keeping an eye on now is if we continue to go down, I'll put in another measurement here from the high and to see how much on a percentage basis are we going down. Right now, we haven't gone down enough to really worry about this, but if we do continue to fall from here, I'll add another measurement on this. Keeping an eye on the S&P 500 and S&P 100, they both tanked in Friday's session. Mass index not generating a signal right now. We're moving up a little bit, but we're still below the moving average with our standard deviations chart. This just measures speed. It doesn't tell you if we're going up or down. It just says, okay, over the last 10 periods, how fast are we moving? And it's picking up a little bit, but until we go above the moving average, there's no need to show this in the video. Long-term rainbow, even though we declined, we're still above all the lines in the rainbow, and the lines are still going up. Daily special K chart still triggered. We had a crossover here to positive back in August, and that is still in effect. Now, I wanted to bring this up. Now, this won't be official until the end of October, and we're just still kind of getting our way into the middle of October. This is a monthly chart of the TTM squeeze. Now, what we've been seeing lately on the daily side, and I cover this in the daily video, is we have been going up recently with the S&P, but the TTM squeeze is going down. That was a negative divergence. We weren't really seeing that in too many other momentum-based oscillators. There's some other indicators that we use that were showing longer-term negative divergences, but when this is going down and the S&P is going up, that's a bit of a warning sign. Well, this is a monthly chart, and we topped out right at the end of 2024. You can see here where we were lighter blue, that's positive. And then as we started to go into 2025, this turned darker blue and declined. But we were starting to improve. Now, in September, we went up enough to turn this back to a lighter shade of blue. That's positive. And we were lighter shade of blue until Friday. Now it's turning to that darker shade of blue. Now, I wouldn't read too much into this. Like I said, this is a monthly chart. It won't be official until we get to the end of the month. I just wanted to point it out here because I do look at this chart every day. And if we start to see some weakness in here, I'll probably bring that up from time to time in the daily video. And weekly chart of the S&P, weekly chart of the DAX. And we had been getting up to a pretty strong correlated relationship. Well, now we're getting back down to a neutral relationship. This is just to see, okay, longer term, what's the relationship between US stocks and European stocks, specifically German stocks? And support and resistance levels, even with the decline, we fell below the blue line and the red line, but we haven't rolled over yet. We are going down a little bit with the green line, that's short term. The blue line hasn't crossed back below the red line, and we're still above the cloud. So even though there's some damage that's been done to this chart, we haven't actually turned over and gone negative here. Then the Vixen, and you can see pretty wild here. This is one of the reasons I don't use it. These look like icicles falling off a roof here. But we did really go up here with the line chart. The top is supposed to be a bar chart, and volatility did pick up. Friday caught a lot of people off guard. They weren't really expecting to have happen what happened. Then we look at the S&P and then a growth to value ratio down here, Qs to diamonds. A little bit of a drop off, but not much of a change with the overall correlation. And then the Dow, which is just setting recent all-time highs, of course, it was down on Friday. The transports, which were going sideways, it's like they don't participate to the upside, but we go down and they do participate to the downside. That's the red line. And we're seeing quite a bit of a disconnect between the Dow and the transports. And a little bit of a decline here with the regional banks, the financial sector coming back down below both of the moving average. We're still technically in an uptrend here, but the more we stay below these lines, the more we might see a death cross with this ratio. And like everything else, the bank ETF, which had been holding out at about its 50-day moving average, it dropped below that. So we'll be seeing, are we going to come all the way down to the 200-day moving average with this ETF? Not really much of a change here. We look at energy, which has been under pressure lately, and bonds have been going down. So we're just kind of chopping along sideways, a little bit lower here, but really no conviction when we look at this overall ratio. Now, if we continue to go up with gold, when this is going up, that means gold's outperforming the S&P. I'll extend this line down. We're not quite there yet, but gold's up over $4,000 now an ounce, and stocks, this was going up even as the S&P was going up. It's just the gold was going up more. This could end up acting as overhead resistance with this ratio if we get up to that line. Then emerging markets versus developed markets. We saw a real drop off here where emerging markets underperformed recently, but we've been going up a little bit. Emerging markets typically have been performing better. They're setting new all-time highs and in a more solid uptrend than the S&P, even though that's been close to all-time highs as well. Then you take the US 10-year yield and subtract the German 10-year yield. I know it sounds crazy. And then we put the US dollar index down here, and you can see it's going down a little bit, but there's a fairly high correlation between the top chart and the middle chart. This tries to look at the interaction between interest rates, both US and German, and then comparing it with the US dollar index. And most of the time, we're up here in this blue area. That means the correlation is fairly strong. The German DAX, which it was down on Friday as well, but not as much as the S&P. It has been able to recently get back above its 50-day moving average. And we were going up. When this is going up, that means US stocks are outperforming German stocks. Now we're starting to see them coming down again. Now, if we go back to the beginning of 2025, we were seeing this right off the bat. Before we started to go down with the S&P, this ratio was already going down. So we'll keep an eye on this because it might be a little bit of a flight to safety. Now, in the US, what we usually mean by that is that folks get out of the growth stocks and they may go to value stocks that tend to hold up better if we're going down, or they get out of the stock market completely and they go into the bond market. That's why we saw the 10-year yield really dropping on Friday. Another play could be, okay, let's get out of US stocks and go over into German stocks. So we're watching this ratio. If this continues to go down as it did earlier in 2025, that might be another warning sign that further weakness may be developing. And rate of change charts, I just use these for information. Going back 250 periods, we did drop down a little bit in the latest reading. Also 250 periods here, but still looking pretty good when we look at this longer term. And then we're not really seeing much fear here. When this ratio is going up, that means the market's concerned about inflation and interest rates. This ratio actually went down on Friday, and we're in a downtrend overall. So this is suggesting the market's not worried about inflation or interest rates, either of those going up. Not really seeing much of a change here when we look at tips to 3 to 7 year bonds, just kind of chopping along sideways. Tips to 7 to 10 year also declining here. If the market was really concerned about inflation and interest rates, this ratio would be going up, not down. And the long-term bond, which is in blue, it's been going up. The S&P's been coming down, at least in Friday's session. So on a short-term basis, they're actually going in opposite directions. This is a 10-period correlation, but longer term, it takes longer for that to move drifting down just a little bit. Then we look at the Qs to the long-term bond. We're coming down with the Qs, going up with the TLT longer term. Since it was just one day so far, we're not really seeing much of a change in the longer term correlation. Then we have been dropping down here with the 2-year Treasury yield, which typically is more positive for stocks. Then retail, which had been doing a little bit better. Now, the top area is a ratio between the retail sector and the S&P, and it was going down, 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 down. Now we started to ever so slightly go up. Well, now it's starting to go back down. We look at the retail sector all by itself, where it had been doing pretty good. It's still in an uptrend, but now it's fallen below its 50-period moving average with everything else that fell on Friday. We'll see if it ends up coming down to its 200-day moving average. If we look at the RSI on bottom, we spent most of the time above 50. Now we're starting to really drop down here. And if we drop to an extreme negative reading, that could be an oversold indication. Then looking at some different ratios. Now, earlier on, discretionary had really been doing well, but especially Tesla had been improving. Well, we're seeing that kind of breaking down right now. The top chart is a weighted version of discretionary to staples. And when this is going up, discretionary, which is more growth oriented, that's more positive for the market. Well, you can see how it topped out and now it's starting to come down. Now, a variation of that, because Tesla and Amazon account for a huge part of discretionary, we look at an equal weight version. Well, that kind of did the same thing. It went up, topped out, and now it's coming down. Then we look at tech to utilities. Utilities have been on fire lately. They were down with everything else on Friday, but they had been doing a lot better. And so we're seeing this ratio coming down. Now, biotech to healthcare, that's still looking pretty solid. But another one is hotels to utilities. Look at how this ratio is really going down. In a more positive environment, all of these ratios would be going up. And right now we're getting a mixed picture. Now, I wouldn't put too much into hotels. It's not like this is the backbone of the U.S. economy, but this is giving us a bit of a warning sign here. We want this ratio to be going up. It's really going down with some conviction. Then we look at bellwethers, where the semiconductors, they're just coming off of setting recent all-time highs. Home builders, as interest rates were starting to go back up, we've been seeing home builders going down. Transport's just been going sideways and then fell down on Friday. Retail also under some pressure recently. And then regional banks, the smaller banks, which had been holding up okay, but now they're showing some weakness as well. Then we look at European stocks to American bonds, coming down a little bit here, but still at the top end of the rainbow. For the most part, European stocks have been outperforming U.S. bonds. Then we look at this like an oscillator. This is the percent of stocks in the S&P above their 200-day simple moving average. We're above 50, so that's positive, but we had been improving. Now we're starting to come back down. So we're positive here, but this is showing some more weakness. And we do that same analysis to those stocks in the S&P above their 50-period moving average. That's actually gone negative. We dropped below 50 here, and we are now declining. We look at the mid caps, really coming down here. Saw some weakness there, and we're seeing a lot of weakness also with the small caps. So on Friday, a lot of damage was done. Is it going to be repaired pretty soon, or is this the beginning of more damage yet to come? Right now, depending on what YouTube video you watch, you'll get, yes, we're going down, no, we're going up. I look at charts. I like to look at what's the market actually telling us rather than listening to somebody's opinion about it. We just follow it because this is data. These are the facts as we know them right now. We're coming to other conclusions. That's just speculation. And I like to analyze things and make decisions around things that are more concrete. Then this is still looking okay, even though it's weakening here. The SPY to staples ratio, this has really been going up. Now, we did come down on Friday, and what we're going to be looking for is a continuation of this ratio coming down. This is what happened at the end of 2021. This rolled over and started to go down. And then early 2022, then we hit the all-time high with the S&P. So this was actually leading us into that all-time high. Then we finally bottomed later in 2022, and we've been coming up out of that. We started to watch this again when stocks were tanking last spring, and it looked like, oh boy, here we go. But then we finally bottomed and came up out of that. Are we at the beginning of something here, or is this just a little blip before we get set to go back higher? We don't know the answer to that right now. We're just going to be keeping an eye on this. If this really starts to tell us something, I will be showing it in the daily videos. Thank you. I hope you're having a wonderful weekend, and I will talk to you in the next video.